Chris, welcome to Real Vision. I think it's the first time you've been on, right?
It is, yes. Thank you very much for having me. It's a
I
pleasure.
don't know. I don't know why it took so long, but anyway, you're here now.
Exactly.
So just to let people know, just give a bit of background about what you do, and then we'll dig
Sure.
into your crypto journey just to bring everybody up to date.
Yeah, sure. So I run the international business at Fidelity Digital Assets. So I joined in 2019, and I have a career in commodities. So I started off as a commodities trader, managed different commodity trading businesses, but really got the digital asset bug over a period of years, but decided to transition to this full time in around 2018. So yeah, it's been a pleasure to be here. It's a journey. It's been a journey at Fidelity. We set up a client-facing entity in 2019, and so we're expanding and charging full steam ahead.
So, what attracted you to the space in the beginning? Talk me through when you first kind of learned about Bitcoin, or what was your entry into the whole thing, and what was the light bulb moment for you?
Yeah, so it was actually from my brother, and my brother isn't in financial services, but he has a knack of identifying sort of mega trends relatively early on. And so he was a huge proponent of the internet and was made a number of investments around that time. And I think it was around 2013 he was adamant that this was going to be enormous and that this was as relevant for technology and society as the internet was. And he was persisting with me to try and take a look at it in more detail. And, life just gets in the way. And so I kind of half-heartedly sort of took a look a few times. And like any trader, if you buy a little bit of it, then all of a sudden you pay a lot more attention to it. So I did that in 2015. And I would say it was pretty pedestrian still at that point. I'd buy a bit, I'd sell a bit. And it was really sort of the beginning of 2017 when we started to really take off. And you could just see the level of activity that was going on in the space. And I, quote unquote, went down the proverbial rabbit hole. And so, yeah, that was really the journey. And at work at the time, I was running the commodities trading desk for an investment bank. And I approached my boss, and this was probably the summer of 2017, to ask, this is really starting to take off here. We're starting to talk to clients about this, not because they necessarily want price exposure or they want services, but just because they're interested. And so how do we respond to this? What is the bank stance, and what do we see our direction of travel? And the short answer is that there was nobody really looking at it. And so I thought that was a mistake. And so I proposed setting up a small research group just to look at what the various opportunities were. Is that for a bank, is that prime services, is it custody, is it market access? From a markets perspective, is it OTC market making? And then there are at the time we had this ICO boom, and so you had this enormous ICO treasuries. Do they need help risk managing that? M&A advisory, that type of thing. And so it became apparent that that was really a full-time role. And so I transitioned into that full-time beginning of 2018. And, over the next 6 to 9 months, it became increasingly apparent, we also kind of topped out. We entered a sort of multi-year bear market. And so I think to be honest, like a lot of the banks were just sort of thankful that it was going away. And so, so it became pretty clear that it was going to be slow moving, and so decided to exit. Started speaking to Tom very soon thereafter about what Fidelity's intentions were, and that really resonated with me. It was a large scale traditional financial services organization, but had a deep history of technology innovation, and had been looking at the space going all the way back to 2014. So had already a very rich history within digital assets. Had been mining Bitcoin consistently since 2015, et cetera. And so this was support that really went to the very top of the house. And Abigail Johnson, our chairperson and CEO, has been a long-standing supporter of the digital asset space. She was a keynote speaker at Consensus in 2017, in May 2017, when the price was 1,500, $1,800. And so we're incredibly fortunate to have that level of support at the very top of the house, because I think it's less so now, but I think certainly back then, it's a very divisive subject. I mean, even now it's relatively divisive, but I think that, there's a lot of education since then. And these types of decisions need to be made right at the very top of the house, because, if a bank or a large scale financial intermediary is to enter this marketplace or start providing services, it's likely to be front page news on the FT. It's likely to be front page of the Wall Street Journal. And so you need buying at that kind of level. And I think that, back then there were nexuses of information and excitement, but they didn't permeate right to the very top of the house.
One thing's interesting. I've known that traders have come into the space. There's a lot of people come from two areas, one from commodities,
right,
and one from emerging market FX.
Yeah.
Because they're people who understand risk.
Yes, that's
and
right.
And volatile assets, and how to run risk with volatile assets, because most people don't have that skill set. It's very different.
Yeah, I think that's right. And I think that, a lot of it is very similar. And you're right. I've noticed the same thing. And it is the sort of underlying volatility. There's the gap risk that involves there's one-sided trades, and then all of a sudden there's just no bid or no offer in the market, and it's having to deal. There's also as well, I think, now that you're seeing a lot of cash trading versus futures trading, and that is all something that commodities guys at least are very, very familiar with, running cash versus derivatives, and so on and so forth. So yeah, it's a skill set that I think tees you up relatively well for this asset class.
What was fascinating is I started talking about the adoption and saying it reminded me a lot. I was at Goldman back in the late 90s,
right,
and the GSCI had come out, and I was servicing hedge funds, so we were all talking about that and how people can get involved. And then you wrote a whole piece on it. Talk me through this, because it was bizarre, because you'd come at it exactly the same way and said, look, this is really similar. We've seen this before. Talk us through the paper you wrote, because it was interesting.
Yeah, sure. So, well, to me, I look at the digital asset markets now, and I look at the setup that we had in the late 90s, early 2000s with commodities. And I joined my first trading desk in September 2001. Brent was trading $16 a barrel, and nobody really cared. Now a week later, 9/11 happened, and things kind of changed dramatically thereafter. But the setup involved, it just it's almost like and we're going through the same questions now. People are asking, but is this a real investable asset class? Does this have a place in a traditional diversified investment portfolio? And these are questions that we went through with commodities 20 years ago, and like we now know that pretty much every managed portfolio has some allocation to commodities as a diversifier, and so it's just interesting to me, and the setup that we had back then and the setup that we have right now, and the parallels, I think, are just really striking. And so a lot of people don't know, well, maybe don't remember this, but prior to the early 2000s, most investment portfolios didn't have an allocation to commodities. They were really corporate hedging markets. And then we saw a series of what I would call product, regulatory, market access, and infrastructure developments that really sort of laid the foundation and enabled institutional participation. It didn't necessarily drive the institutional participation, but at least it put it in a place where you had a sort of basic foundation upon which you could build an investment case. And it really, and fast forward to today, and I think that's exactly where we are with digital assets. And I think it started, going right back. I mean, if you look at the sort of regulatory environment, and the reason why I think it's useful to look at that back then is because it's pertinent now with for digital assets. And we were coming out of the 1980s. Obviously, saw a huge deregulatory push in the UK, known as the Big Bang. We were seeing the same in the US. At the same time, commodities markets were getting deregulated globally. So oil came off fixed pricing in 1983. US nat gas was deregulated in 85, US power in 92. And so you had these, London and New York, as a result of these deregulatory trends, emerged as these global financial capitals at a time when we were going through enormous financialization and massive growth in financial services. And around that time, and if you're at Goldman, you'll remember, but we started to see banks increasingly push into more assets, more markets, more jurisdictions, just because quite frankly, there was a lot of money to be made. And at the time, and you mentioned the GSCI, I think that was really a seminal moment, because prior to that, if you were an institution looking to get broad-based price exposure to a basket of commodities, you had to build that yourself. And building that yourself really meant managing a basket of physically delivered futures, and that has its own set of risks. And these are all expiring at different times of the month on different exchanges in different time zones all over the world, and all the operational burden and risk that entails. And so the GSCI was just it was great. It just packaged this all up. It was effectively, commodities price exposure as a service. You enter one bilateral swap with Goldman or whichever other bank, were providing support for that index, and all of a sudden you had, financialized, derivatized exposure to a broad basket of commodities. And at the same time, there were other kind of like product innovations occurring around that time. November 2004, we saw the introduction of the first single asset passive commodities exchange traded product, GLD, which now has $60 billion worth of AUM and 30% of the market. And around that time as well, we were going through this period of the development of the infrastructure as well. A little known company called ICE, the Intercontinental Exchange at the time, acquired the International Petroleum Exchange in 2001. And so they introduced side-by-side trading of oil futures electronically alongside Open Outcry. Within 4 years, they shuttered the Open Outcry exchange and it went pure electronic. And that was replicated across a number of different exchanges and markets. And the importance of this, or relevance of this, is that it leveled out the information asymmetries that existed. It replaced opacity with transparency. It meant that you had this democratization of market data. And, again, up until this point, we hadn't had like that, institutional interest. And all these developments came at a time when the investment case for commodities was really quite compelling. And I think you can split it down into three different pillars, if you will. And the first was diversification. So because these were a completely separate asset class that had their own supply and demand fundamentals, modern portfolio theory 101, you introduce an uncorrelated asset into a diversified portfolio and you get net benefits. Harry Markowitz in 52 said diversification is the only free lunch in investing. And the second pillar of that is the positive expected return. So because a healthy commodity market is typically in backwardation, what that means is the unrolling of those positions. In order for that price exposure not to mature, you're selling a prompt contract and buying a deferred contract. If the market is in backwardation, you're therefore collecting that roll yield. And this at the time was somewhere in the region of 5 to 10%. So not only do you not need the market to go up to make money, you're getting that diversification, but you don't even need the market to go up to make money. And the third thing that was happening around that time was there was just this incredible bull case for commodities writ large. And this was owing to the 10th five-year plan issued by the CCP in China. And so one of the objectives was to transfer 40 million workers from the rural areas into the cities. Now, 40 million workers. And so bear in mind, that's not 40 million people, because then you've got children and you've got elderly people that will go with them. It's 40 million workers. And so that was the working population of Germany at that point in time. Think about all the industrial and social infrastructure you need to create that type of the infrastructure in which they can live. And so that's roads, it's power plants, it's hospitals, it's schools, it's sewer systems, it's factories, and all the rest of it. So this was a forewarned demand
shock.
Yeah,
it was a demand shock.
Demand shock. Yeah, and we can see from this chart here that the primary energy demand almost doubled in that 5-year period. And so huge macro shock that was advertised in advance in a way that only a controlled economy can do. And so, the last thing on this point is that, you had this sort of very supportive macro environment. So we're in the middle of a bear market. The tech bubble had burst. Equities had been selling off for a period of time. And, at the time as well, I think, so you look at now, so the CAIA Association has put out data saying that 6% of global investable assets were allocated to alts in 2003. You fast forward to 2018, that had risen to 12%. So we were in this environment where people were happy to look at
alts. In this case, not alts as in crypto, but alts as in alternative assets.
Exactly right. Yes.
In the traditional sense.
And so the result of all that was, all these things combined is that we then just saw this enormous influx of institutional capital into the space.
The cryptoverse is an incredibly exciting place, and it's going to be absolutely massive. This has been just a small taste of my own personal journey into crypto. Join me for free over on realvision.com/crypto as we discover just what this new world will look like and much more.